It's another episode of the College Financial Health Show with Matt Hendricks and Gary Stocker. Thanks for making time to watch. It's probably the only show that looks at the financial health and viability of private colleges across the country. Today, we're looking at a college, Morehouse College. Dr. Matt Hendricks, what do you have for us?
Same thing. So this school actually looks pretty positive. So although I will give them some things they might look at, because nobody's perfect, right? Um, so we're looking at Morehouse College in Georgia. I'll pull them up on the advanced compass here. And right away, it looks weird, right? You got this
Oh,
big
no, look at that.
income, and then all of a sudden it's down. And anytime I see that, I'm like, oh, I wonder if they split out operating revenues, and they didn't. All right, so 2 weeks in a row, Gary, we picked a school that has kind of a weird audit. Would say it's not ideal, right? So they don't have. So again, there should be another section here that's non-operating revenues, like investment gains, losses, restricted contributions for endowment, stuff like that. But they don't have that. So this is really not super useful because of that. What's more useful, what I usually do is flip over then to the cash flow statement.
Yep.
And bam, we have a $17 million surplus for cash from operations, which appears to be excellent. But let's take a look at it. Ratio basis. And so I saw that when I was prepping a bit ago, and I was like, wow, I think this school is doing fine. So net cash from operating activities, and here's what it looks like. They've had these massive surpluses last since 2020. I'm sure all that COVID money was here,
Sure.
right? And they're still doing it. So we got looks like some really big surpluses, but relative to their revenues, or sorry, relative to their revenue, which is still not technical. I guess that's still kind of flawed because it's not just operating revenues, but anyhow, it's still big. To sort of rescale it to everybody else, it's above the 75th percentile. So
Yeah.
looks really good. And as I suspected, usually when you have these big surplus for cash like this, either that money is going into the endowment or going into other investments that are outside of the endowment, which is less common, or in the buildings or whatever else. But you can see where the money's going, right? A lot of money going into the endowment here. The endowment is sort of surging, and that's excellent.
Yeah.
And yeah, they're not strapped for cash, of course. So, whoops, I'm doing the wrong thing. I want to show you guys CapEx, and I'm not expecting to see anything problematic here because they have the cash, right? Usually, when
Yeah.
CapEx is the problem, they defer maintenance and all that when they just don't have the money, and they've got the money. And certainly, CapEx looks excellent. It's been above one
Impressive.
for a long time, since 2019. Yeah, and so that looks good. Revenue, again, not great to look at, but we can look at net tuition revenue and see what's happening. Their net tuition revenue is growing like crazy. So here's the school, unlike the previous school we looked at, although these videos are not super linked, right, I guess, but you can see they got hit pretty hard during COVID, but it recovered immediately, right? And that's the normal response, right? I don't see a lot of
Right.
you can see from the median and 75th percentile, 25th percentile that the trends really don't change all that much. But yeah, they're doing great on a net
What's the
tuition
per student look
revenue
like on
basis.
that?
What's that per
What's the per
student?
student look like on that one?
Yep. Yeah. So all of that
Oh,
revenue growth,
nice.
this is a really
Look at
interesting
that.
case. All of this revenue growth is coming from a higher price, it looks like. Their net price must be much higher because the average price the students paying used to be 13,000 and now it's 22,000 almost in just a few
Can you
years.
explain the drop in 2023?
Yeah, I don't know. That'd be interesting to go back and look at what happened here. They may have reset tuition or offered more scholarships or something, but nevertheless, their price is still much higher than it used to be, right?
I wonder what their enrollment looked like in 2023. If it was plummeted and they
Yeah,
had to
let's
give
take a
away the
look.
store to get more students.
Actually went up. So that's
Did.
maybe because they they dropped the price that year and like got a bunch more students or something. But I'm just guessing
Yeah,
on
yeah.
that. I have to look at the freshman classes and see what happened. But yeah, like here's the thing: this school has net tuition revenue that is growing substantially, but the enrollment is not, right? Enrollment 2,200 students in 2016, 2,200
Yep.
students in 2024. So all of the growth is from a higher price. So keep that in mind, right? You got the enrollment cliff coming here. Probably this year will be the first year. Next year will be, I can't remember exactly when it hits, but it
Depends
doesn't
on who
have
you
to be
talk to.
catastrophic if your price, if the students pay more, right? Like that can offset all of the demographic cliff. But you have to offer something that they're willing to pay for. That's the
Yep.
tricky part. Okay, so revenue looks great. From what I can tell, net tuition revenue is growing, enrollment's flat. A lot of schools actually prefer flat enrollment, but if they want to grow, there's probably some stuff we could find for them. I'm sure there would be strategies we could find for them on a strategic compass. Let's take a look at the expense side though. Starting with employees, remember this school has big surplus, and part of it I think is just
Hmm.
they're getting they're getting it done with a very low staff size. Again, if this is ideal, I think, to run with a lean staff and pay them
Yeah.
well, right? The benefit is that you're not going to have a high payroll cost. And you should, in theory, have happy faculty, happy employees, because they're just getting paid a lot more than what they would make somewhere else. And that's how, ideally I would set it up if I were in charge of HR or something. But you can see they just have a really lean payroll, which probably explains some of the huge surplus. But you got to worry, like, are they getting paid well and stuff like that? That's the part they need to check. You don't want to have low morale. And then on top of it, see that, oh, we have a really low payroll cost. And this is another thing that could hit morale. And so it's not all roses here potentially, but if you look at directors and officers, this is yeah, I just showed you that the overall compensation staffing was low, but they're paying a lot to their officers and directors. So I would
Interesting.
check this again, potentially top heavy kind of
It's got to be some
administrative.
of the top numbers in the country. Look how far that is above the 75th
Yeah.
percentile.
Yep. So again, this is from the 990 and probably was completed by their auditor. Need to dig through these numbers and figure out what in the world is going on. This is a lot to spend on directors. And at the same time, this is what you're spending on pay for your other employees, which is way
Yeah.
low. So either there's something wrong with the reporting or there's something wrong with the sort of makeup of the staff at this school or both, right? So I would check that. So a compensation study would be warranted, checking the layers, how many administrators you have, what everybody does, that kind of stuff. We can we can do a lot of that benchmarking in the strategic compass actually. So could get some insights into that. Here's another school also with other stuff going on with like insurance. I don't know what's going on with insurance here, but again, that
Hmm.
looks really high. Office expenses. So while they have a really lean staff, it's kind of funky how it's set up, right? May not be optimal. Then they have high expenses elsewhere. So they may be leaving some stuff on the table here to kind of run this place really, really efficiently. And while fundraising expenses are really, really high, that may be okay if they're getting a big return, but they need to check the ROI. Like this is a significant increase here in spending on fundraising, just looking at them compared to themselves. Is it actually like panning out, producing more? And does it make sense, right? Like what's the
You got to wonder
return?
if they didn't hire a lot of folks in 2024.
Travel expenses, same thing. Check all your travel budgets for each department. I was at a school as a faculty member when, the first things they did was cut maintenance, they cut grounds crew and cut travel spend, right? And of course, benefits was another thing. So there's a lot, there's some of the things that are early in the chopping block. The school doesn't have financial problems that I can tell, but I certainly don't want to be off the charts on some of this stuff. And then fees for services, again, I think this looks odd.
My.
Yeah. So it looks like they have been working to bring the vendor spend back down, or they did some construction perhaps, and now that's sort of ending. But again, it's worth a look. This is several years now in a row where they just are spending a lot on fees for services, which could indicate too many contractors or bad contracts. Let's dig into that a little bit more. So they do have a lot of contracts, and it's always been high. So it's probably not construction unless they're just
Way high.
constantly doing construction. So let's take a look at what some of these contracts might be.
And the
Morehouse.
table Matt's going to bring up is the vendor table. It is part of the advanced compass where you can actually compare your
Yep.
college's expenses across all sorts of vendors with
Mhm.
the with those same expenses for some 1,300 other private colleges in the country.
Yeah. So we see one right away. This really dark color, that's like a standard deviation and a half higher than normal for the revenue. And what is it? It's maintenance. So this needs to be looked at very closely. This is a $13 million contract for maintenance. And I know right away, this is rare, very high. There's no disputing that. It's very high for how big the school is in terms of FTE. It's also incredibly high for how big the school's revenue is. So it's not ideal to be spending a ton on this, right? Unless you're just attracting students that like flowers or something, right? Like being sarcastic, but you got to put this stuff in perspective, right? I would look at that, or if they're just doing renovation with extra cash. There's some things that could explain this, but I think it's harder to explain when you see that it's here like every year, 13 million, right? 12 million, 12 million, 12 million. That can't be construction, right?
No,
Uh,
it's got to
and
be a
I'm
lot of flowers.
Aramark does construction, so it's I would look very closely at that and I mean, at a minimum, just look at the cost. The cost of getting another bid is like zero. Just call another vendor and ask for a bid and compare it to this 13 million. Super simple thing you can do. Same with food service, a little bit high for how big the school is. Might look into that. Again, that's a significant contract. There is some construction here, and it's not Aramark, it's separate.
Right.
Let's see. Yeah. Okay, Bank of America Financial Services. I just studied a school where there was a weird contract here. I don't want to reveal too much, but I would look at this. What is this? Is this like interest or like fees? This
Huh.
is a little bit interesting, and I would look at that as well. It's also a really big contract or payments. Not sure what's happening there. But anyway, I think it's worth. We already showed they have another lot of high numbers of contracts. Just go through them
Yeah.
all, double check. So it seems like they have maybe a high number of administrators. So I mean, somebody could probably take that task on, right?
Yeah, let's take a look then at the 2025 College Viability App to kind of dig into some of the other areas for Morehouse College. Let's take a look at the four-year graduation rate. And the four-year graduation rates from 2016 to 2023, the last available data. Again, not impressive, Matt. You'd like to see the four-year graduation rate somewhere at least close to 50%, and we're seeing an 8-year average hovering around 40%. And again, colleges are paid to graduate students, and Morehouse College is not getting it done. They appear to be financially successful. Obviously, they are, based on what you just shared. You'd like to see maybe some additional resources dedicated to getting students through the graduation period and not just in the door as students. Let's take a look to see if they're having, what are they doing with discount rates? I'm looking at unfunded institutional grants for Morehouse College. And that's somewhat impressive. They kept that number pretty flat for the last 8 years. And what that tells me is they probably got a pretty good student base who wants to come to Morehouse no matter what. Because like unlike other colleges that we look at, who have to give away the store to get students to go to those colleges, that appears not to be the case at Morehouse. And again, we did see that with the net tuition revenue was strong over those last
Mhm.
overall over those last 8 years. Let's just take a look at is just kind of what you had tuition and fee revenue at Morehouse College. Impressive, up 14 million over the last 8 years. We don't see that very often
Mhm.
in what we have going. Let's take a second to take a look then at the 2025 College Majors Completion App. And what I have here is I brought up all of the majors at Morehouse College, the bachelor's degrees, and this is the internal market share. And what we're looking at for Morehouse College is the number of graduates in these disciplines. Business management in the year 2020 had 106. And what's the percent internal market share? of the 64 some odd of the 64 majors we have in the database, you can see the 24 or so that Morehouse College has. Of those 24, 37% of those were in business administration management in 2020. And that same logic applies to all of them. It appears that, for sake of example, that the business administration management major is an increasingly large internal market share percentage. And you've heard me talk about this before, Matt. When you get that number above 30%, you have to wonder if a college is not becoming too reliant on a given major. And then at the other end of the spectrum, look at all of these low enrollment majors across the board. All these low enrollment majors were next to none. And I'm going to add a story to that. In the 1st of November, the state of Indiana gave us a number, Matt. And all the public colleges in the state of Indiana whose majors and bachelor level majors, 15 graduates in a given year, were required to drop that major.
Wow.
All right, so now we have a number, right? It's going to be a different number, but Indiana says 15. So if we apply that number to Morehouse, we can see 3, 6, about 10 or 11 of their majors don't meet that 15 major threshold. And the reason I bring that up for Morehouse, and they're not unique, many colleges have a lot of low enrollment majors, is now all of a sudden there is a standard, a threshold, if you will, that's official in one state. And what happens now if another state for public colleges does the same thing? What happens if 2 or 3 or 4 or 5 more states ask their public colleges to cut majors below whatever number, 10, 15, 20, whatever it is? When does that go to private colleges? When do private colleges all of a sudden realize if they're having fine studio arts and they have 3 majors graduating a year, they can't afford to keep that major? And so now all of a sudden, with all the cutbacks and layoffs that we're talking about, and I have those every Monday on This Week in College Viability, cutbacks are gonna continue because now all of a sudden there's a number that we can compare that to. And Matt, when we talk about Morehouse College, strong financial college, financially healthy, better than many that we take a look at. But you saw some areas, especially when Dr. Hendricks was talking about that, his areas, and when I was talking about the majors. If you're looking for some data, some guidance, I'll have some contact information in the show notes. Reach out. We can set up some private personalized demos for either the advanced compass that Matt showed, the strategic compass that he referenced, or any of the series of college viability apps and the majors completion app as well. So for Dr. Matt Hendricks, I'm Gary Stocker. Thanks for making time. We'll be back soon with more colleges on the College Financial Health Show.